Imagine this. You are watching a high-stake cricket match. It's final over. Every ball counts. The tension is sky high. The outcome can change with every single delivery. That's exactly how DTE, days to expiration, work in option trading. As the clock ticks down, every movement becomes more critical. Today I'll show you why DTE is one of the most important factor in your option strategy and how to use it to your advantage. If you have ever wondered why some options are expensive while others are cheap, the answer often lies in DTE. DTE is a simple countdown to an option expiry date. If there is more time, there is more value. If there is less time, it's cheaper but riskier. Let's bring this to life with a real example. Imagine this. You are looking at Reliance 30th June call option. Today is 15th June, which means that you have 15 DTE. On June 20th, you will have 10 DTE. Let's say you pay 50 rupees for this option. That's the premium. It reflects the market expectation, how much Reliance might move in next 15 days. Now here is the magic. What happens if we change the DTE? So here is how DTE changes the price of an option. If you increase the DTE, option price will go up. For example, if you buy a call option expiring in 2 years, it will be way more expensive. Why? Because there is more time for a stock to move and time has value in the options. If you decrease the DTE, the option price will go down. For example, if the same call expires tomorrow, it may cost you just 10 rupees. Why? Because there is barely any time. Unless the stock moves fast, the option expires worthless. So what's the big takeaway? DTE is a key factor in how options are priced. Long DTE is equal to more time, they are more expensive. Short DTE, less time, cheaper. Understanding DTE helps you choose right expiry, align your trades with your strategy, and balance cost versus time. It's your job as a trader to decide. Are you in for a quick match or a long test series? Now let's test your knowledge with a quick quiz. Question number 1. What does DTE, days to expiration, refers in option trading? A. The number of days before an option expires. B. The price of an option. Or is it C. The number of trades executed in a day? Or is it D. The strike price of an option? The answer is A. The number of days before the option expires. Question number 2. How does a higher DTE affect an option price? A. It makes the option cheaper. B. It makes the option more expensive. C. It has no impact on option price. Or D. It only affects stocks option, not index option. The correct answer is option B. It makes the option more expensive. Here comes question number 3. Which of the following statements about DTE is correct? A. Options with fewer days to expiration are usually more expensive. B. DTE does not affect the option price. C. The longer DTE, the more time the stock has to move, increasing the option's value. Or is it D? Shorter DTE options are always make more profit than longer DTE option. The answer is option C. The longer the DTE, the more time the stock has to move, increasing the option's value. Question number 4. If today is 10 June and you are buying Reliance June 30th call option, what is the DTE? A. 10 days. B. 15 days. C. 20 days. And D. 30 days. You guessed it correctly. The answer is C. 20 days. Last but not least, here is question number 5. Why do short-term options, low DTE, typically cost less than long-term options? A. Because they have higher chances of success. B. Because there is less time for the stock to move, reducing their value. C. Because they include dividends in the pricing. D. Because they are only used by institutional traders. The correct answer is, you guessed it correctly, it's option B, because there is less time for the stock to move, reducing their value. Share your scores in the comment. I'll personally check them and guide you if needed. If you found this helpful, please share this with someone who is new to option trading. In the next video, we will explore the call options in simple cricket terms. Until then, keep learning, keep winning.